Growth coming out of China was again across the wires for global markets. US and European equity markets were slightly lower overnight after economic data from China has showed that inflation has increased over the past quarter, lending activity is still very high and manufacturing is still going full steam ahead. This has brought into question whether the Chinese government will need to impose further measures to try and cool their economy down. They have already told banks to pull on the reins on their lending. The key question for global markets is what effect this will have on the global economic recovery, given that we have really relied on China to give us a good boost over the past 12 months. The New Zealand dollar was back under 70 cents against the US dollar on Friday morning after the Reserve Bank of New Zealand left the official cash rate unchanged at 2.5% on Thursday. Sheep farmers will be feeling a little bit better about the currency as well. The New Zealand dollar is back under 47p against the pound, but there is still some way to go yet before they see any real benefit flow through to local land prices. The Reserve Bank continued to signal that they will not increase the rate until mid-2010, given that our economic recovery is still relatively weak. The gap is really widening between us and other countries such as Australia, who are experiencing pretty strong growth at the present time. The prospect of slower OCR increases has seen wholesale interest rates pull back recently. In a recent meeting held by Professor David Hughes, he suggested that the globe is undertaking a fundamental shift in policy from fuel concerns to food security. This was reinforced by the news that there is a massive amount of land that is being bought through South America, Southeast Asia and through Africa. A recent deal includes a 99-year lease for 1.5 million hectares of farmland in Sudan to some of the Gulf states. The global population is expected to increase to over 9 billion by 2050. Demand for food is expected to increase by 50% through that period of time. This means that this is good news for our agricultural industry, and demand for our agricultural products should be strong as the population grows, but the resources to feed that population doesn't.